Hey guys, hope you are having a fantastic day. So the earnings for AMC came out earlier this week. By now you should all be well aware that AMC absolutely crushed it in every respect. I gave it a couple days before making a video because I wanted to combine an impressions of the earnings along with the subsequent price action as well as wrapping up other topics that I want to add into the conversation. Let's start with the official earnings report for the second quarter that ended on June 30th. Total revenue grew by 15.6% compared to quarter 2 of 2022 to $1,347 million. Net income was $8.6 million compared to a new loss of $121.6 million in the second quarter of 2022. Diluted earnings per share were 1 penny compared to a diluted loss per share of 12 cents in the second quarter of 2022. Adjusted EBITDA improved by $75.8 million to $182.5 million compared to $106 million in the second quarter of 2022. Net cash used in operating activities improved by $63.2 million compared to the second quarter of 2022 to $13.4 million. Non-GAAP operation cash generated was $99.8 million, which was an improvement of $47.8 million compared to the second quarter of 2022. Finally, available liquidity at June 30th was $643.4 million, including $208.1 million of undrawn capacity under the company's revolving credit facility. Along with this formal immediate statement release, AMC CEO Adam Aron said, and I quote, "While we still have much work ahead of us on this front, AMC's glide path to eventual recovery continued with significant pace in the second quarter of 2023 as our results set new records and represent AMC's strongest second quarter in 4 full years. Following an impressive start to the year in the first quarter of 2023, the second quarter yet again showed great progress. AMC saw more than a 12% growth in attendance, a 15% growth in total revenue and a 71% increase in adjusted EBITDA compared to the second quarter of 2022. Indeed, adjusted EBITDA was $182.5 million, the highest such quarterly figure since the fourth quarter of 2019. Our ongoing progress is obvious and ever so encouraging. Combining AMC's commitment to innovation with a notable increase in both the number and quality of movie titles from our studio partners. Movie theaters are once again captivating audiences and driving attendance back to AMC theaters. AMC theaters across the globe welcomed more than 66 million guests in the second quarter of 2023, our highest quarterly attendance numbers since the fourth quarter of 2019. One area that has far exceeded pre-pandemic norms has been per patron revenue. AMC moviegoers are consistently seeking out the most immersive sight and sound experiences, especially important to AMC as we offer more premium large format screens than any other exhibitor. AMC's imaginative offerings at our concession stands and dine-in theaters also helped us in the second quarter to generate a food and beverage revenue per patron globally, within a penny of our all-time high watermark. Considering the substantial operating margin of our food and beverage business, this is contributing meaningfully to our improving profitability. Furthermore, during the earnings call, Adam Aron talked about some statistics that weren't disclosed in the documents. Because of AMC's determined and sustained pandemic-era cost reduction efforts, along with ticket pricing initiatives, and soaring food and beverage revenues, comparing the second quarter of 2023 to the second quarter of 2019, 4 years ago, pre-pandemic, AMC's overall profit per patron after the cost of goods sold improved by an impressive 40% in the United States and 22% internationally in constant currency. Put those together, that's a 36% total global increase in our profitability per patron in constant currency. The month of July, the first time in the third quarter, was the highest grossing month for AMC in 12 years, and it was the second highest grossing box office month ever in AMC's 103-year history. As you guys know, the performance in July was driven by the resounding success of titles such as Sound of Freedom, Mission Impossible: Dead Reckoning Part 1, Oppenheimer and Barbie. In the United States, the July box office figures represented a 5.8% increase compared to the pre-pandemic July of 2019 and a 20% increase compared to last year's July. Adam Aron noted that the first week of August is continuing with an incredibly strong showing, with the domestic box office about to double that of last year. Before we continue to what I would say will be the more controversial part of the event, I have to say I am very content with the ongoing progress and recovery of AMC. Though obviously not fast at all, it has once again shown what we have all known for a long time, that in contrast to Wall Street's obsession with the idea that theaters are dead, People are actually still willing to pay to watch movies on a big screen. Time and again, I have said that both mediums can coexist, and have proven that even streaming giants cannot exist with theaters, and being that domestically speaking AMC is the biggest chain by a titanic margin, you can unequivocally say that streaming giants, maybe with Netflix being the main exception, cannot exist without AMC. This week on Wednesday, Disney earnings came out and they were horrible. In the span of 3 months, Disney Plus lost over 11 million subscribers. Blame it on woke. Blame it on the poor quality of their movies. Blame it on the controversial politics surrounding their parks in Florida. Or blame it on pure lazy live remakes that nobody cares to watch on a big screen. Whatever the reason, the numbers don't lie, and Disney's streaming service is not profitable at all. With the numbers decreasing, it more than ever solidifies the need for the giant to depend on theaters to make money. And it's not only Disney. Remember, we also have seen Amazon and Netflix both state that they intend on releasing their biggest blockbusters in theaters to help increase the revenue and profit margins, which seem to be growing too fast. AMC has the leverage in these conversations, and though they are weighted down to the brim with insane levels of debt, along with controversies from their board members and CEO, something I always love to talk and point out, it still shows that their business has the biggest fundamental value than any other meme stock. AMC, if navigated carefully, can and will overcome its challenges and, more importantly, Wall Street's defiant attitude towards it. I must rave, AMC delivered not only a blow, but a knockout with these earnings, finally becoming cash flow positive after such a long time. This is a huge milestone, which funnily but not unexpectedly enough, brought about the most questionable price action. Listen, I have seen and witnessed plenty of companies with much less revenue, less recovery, less fundamental value absolute go berserk on much less glamoring earnings report, but AMC only went up slightly in the pre-market, only to drop in price throughout the next couple of days. It was absolutely interesting and bewildering to watch a company, who had a stellar earnings report, get obliterated in the stock market. Now, I am not blinded to the fact they are saddled in debt, that the whole dilution and ape unit controversy makes investors weary. I am one of them myself. As of me writing this script this early Friday morning, AMC accounts for less than 0.00025% of the total market capitalization of all publicly traded companies in the United States of America. Meanwhile, AMC accounts for 10.3% of the entire industry's revenue from lending securities. That's right, this is why the price of AMC is not moving. The manipulation is not something hidden in riddles and dark pools. It's now so blatantly obvious that it raises the question as to what exactly must happen for the SEC to stop watching the hub and pretend to do something. I mean, we already know, especially if you have watched my videos in the past, that the SEC hires from the private industry, with many of their talent having worked for Goldman Sachs, JP Morgan and many other financial industries, so as to help shape and form parameters that allow for what can be deemed as controlled criminality. Regardless, that is something we will touch on later on. Let us now go back to the earnings call, because there were some things that caught me off guard and some things that I definitely disliked. So, when Ada Aaron began talking about the company's future thinking, he shared the ongoing initiatives and current plans for what's to come. First, the issue of liquidity came up. He said, and I quote, "We have made many public statements throughout this year and again in recent weeks that AMC has skillfully chartered our way through turbulent waters at a time when several of our most important competitors failed, and that we watch our liquidity position very closely. We've made it clear that our strategy first is to survive and then to thrive. Of course, we are heartened by the fact that we had $643 million of liquidity at the end of the second quarter of 2023. But some who follow us closely, nonetheless, underestimate the potential for cash burn in the seasonally weaker winter months. This is especially true given the uncertainties of the writers and actors' strike, since no one knows when they will end. We intend to make sure that AMC does not run out of cash by continuing to seek the flexibility to raise fresh capital on the best possible terms. Our highest obligation to stakeholders is to avoid the pitfalls that sank others in our industry into financial ruin. Second, on balance sheet management. In the second quarter, we methodically raised $34 million of equity and retired $42 million of debt. Sean, in his remarks, gave us a lot of other statistics, various time frames of how much equity we raised and how much debt we retired. I am particularly intrigued by this statistic, which I haven't heard yet on the call. Since the creation of the APE preferred equity units in August of 2022, about a year ago, AMC raised $418 million of equity and retired $548 million of debt, including deferred rent. Needless to say, this is very helpful as we contemplate our current liquidity profile. Third, on so-called PLF screens, premium large format screens. As I mentioned earlier, a PLF screen grosses about 4 times a regular non-PLF screen. So it's kind of obvious that we're happy that we have more PLF screens than any other movie theater company in the world. And assuming that we have sufficient cash reserves to invest in growth initiatives in a big way, which, at the moment, we do not, but we could, looking a little further forward. Assuming we have sufficient cash reserves to invest in growth initiatives, we would intend to add a significant number of additional premium large format auditoriums to our system. Fourth, on innovative theater programming. Over the past 2 years, we have experimented with sports programming, and it featured great musical artists on our big screens. We will continue to look for opportunities to expand those innovative efforts. Fifth, on popcorn. Our new lines of ready-to-eat and microwave popcorn for the home are literally flying off the shelves at Walmart stores throughout the United States and on their website. They were launched in March and April of 2023, and we would describe sales as being brisk and pleasantly ahead of our expectations, so much so that we are now looking seriously to expand into other grocery chains and other retail outlets. Once we get to a full national rollout in multiple channels, which could take a while to be fair, but based on the early results so far, I would not at all be surprised if this turns out to ramp up, perhaps becoming up to $100 million per annum revenue source for AMC. Next, on premium gourmet candy. Our popcorn line has been so successful that we are now confident that we should keep going in the area of food. So much so that I expect that, later this year or early next, AMC will definitely introduce a private label line of various AMC theaters branded premium gourmet chocolate candies and gummies. I'm eating some samples right now as we speak on this call. The taste and the packaging are wonderful, in my opinion. And speaking of the taste, these chocolate-covered pretzels are like to die for good. We believe we will be successful with the candy lines as we've been successful with the popcorn line. It goes without saying, of course, that we will still sell Hershey's and Nestle products in our theaters. But just as a year or so back, we asked the late Orville Redenbacher to make some room on shelves for our popcorn. So too, we will ask the long-gone Milton Snavely Hershey and the long-gone Heinrich Henri Nestle for their understanding that premium AMC candies coming to AMC theaters are now in the works as well. And the last item on merchandise. Early in the period where retail shareholders took control of AMC, which basically started in earnest in January 2021, through suggestions that came in on Twitter and other channels, retail investors directed our attention to the possible profits that can come from the sale of movie-themed merchandise and AMC-branded merchandise. We've had meaningful successes in this area, especially with our collectible popcorn vessels sold almost weekly in quantities of between 25,000 and 100,000 units almost each weekend at prices that have ranged from about $20 to about $65 each. We plan to significantly expand our merchandise efforts in 2024 and beyond, with a greater variety of items and a larger available quantity of items for sale. It is not uncommon today for us to sell out of some of our movie-themed merchandise in the opening weekend of a movie's release. Movies run a lot longer than the first 72 hours, and I think our merchandise business would expand if we have greater supply to sell. In closing these remarks, I'd like to address directly the millions of our AMC shareholders, so many of whom pay attention to what I say on Twitter and to these earnings calls. In a tweet yesterday, I expressed my sincerest possible gratitude for all of your support. If you read my Twitter feed, though, as I do, you'll see there's a lot of light, but also a lot of heat directed my way. That's okay. I have broad shoulders, and the variety of views comes with a territory when there are so many voices and so many opinions. As I read these inbound comments, I see that some who care about our company deeply still don't get the nuance of our current circumstances or wish that I would just cheer only the good news. But that's not what CEOs are supposed to do. The success we have seen this year in our theaters, especially including quarter 2 and 3 results so far, is what makes us optimistic that we are on the right road and that, by 2024-2025, we will look back on the decade of the 2020s with amazement and pride as to how well, at AMC, we dealt with the most challenging hands of cards ever directed our company's way in the century plus of its long existence. But despite that medium-term confidence, in the short term, and some of you don't like to hear this, but in the short term, AMC has some serious liquidity issues to solve. We should not oversimplify that it will be easy to overcome the obstacles and hurdles in our path. However, this AMC management team has proven over the past few years that AMC is highly able in liquidity management. So I have every confidence that we will continue to execute well to do what is needed. To the extent humanly possible, I am determined that, at AMC, we will arise to every and to any challenge. So, let's digest all of this, because there is a lot of good in this, and a bit of cringe as well. First, Adam started off with the liquidity issue, once again hinting that retail investors are underestimating the potential for cash burn in the seasonally weaker winter months. He noted that he intends to ensure AMC does not run out of cash by raising fresh capital on the best possible terms, which can only mean further dilution or another batch of APE unit issuance. This is a huge problem, and I am not okay at all with AMC further using their investors to help fund operations, especially when later on they talk about how well popcorn is doing on retail shelves and how they plan on expanding the amount of food products they sell in retail stores. You cannot continue to dilute as the only way to help preserve AMC. This just means that you, as an investor, will have your investment devalued as well as your ownership percentage, meaning less and less over time. This is an abrupt and almost criminal way of looking at the situation. Furthermore, Adam Aron decided to double down and say, and I quote, "Some of the armchair quarterbacks on Twitter, who give me advice every day, if I follow their suggestions, we would have run out of cash a long time ago, or if I follow their suggestions now, we will run out of cash soon." I cannot think of a more ironic and full of shit response from a CEO than this, because just a couple of minutes before this, Adam Aron was literally boasting about the high revenue coming in through merchandise that came about as a result of the large amount of critical feedback and suggestions he was getting on Twitter. These are his literal own words, and I quote, "Early in the period where retail shareholders took control of AMC, which basically started in earnest in January 2021, through suggestions that came in on Twitter and other channels, retail investors directed our attention to the possible profits that can come from the sale of movie-themed merchandise and AMC-branded merchandise. We've had meaningful successes in this area, especially with our collectible popcorn vessels sold almost weekly in quantities of between 25,000 and 100,000 units almost each weekend at prices that have ranged from about $20 to about $65 each. We plan to significantly expand our merchandise efforts in 2024 and beyond, with a greater variety of items and a larger available quantity of items for sale. It is not uncommon today for us to sell out of some of our movie-themed merchandise in the opening weekend of a movie's release. Movies run a lot longer than the first 72 hours, and I think our merchandise business would expand if we have greater supply to sell. So clearly, as Adam Aron directly stated from his own mouth, Twitter is in large part the reason why a significant part of their revenue streams strengthened in this earnings report. In fact, it was so much so, that merchandise is now one of the 7 related items that they plan on working harder around to help generate revenue, so he can totally miss me with the BS he spouted later on regarding the armchair quarterbacks of Twitter, because it was through those quarterbacks that AMC finally became cash flow positive again after so many years. Noted, I will be fair to Adam Aron, and will say that I have seen a lot of his comment section on Twitter and he is constantly getting criticized, called out, made fun of, called a criminal and gets constantly bagged on. I know those things can oftentimes blur the perspective of one on things, as you can oftentimes build a bit of bitterness. I do acknowledge his position is not easy. Whatever he does will be damned by a portion of investors, whether it's retail or institutional, but still, lay back on the Twitter armchair quarterbacks a bit. We are also covering and talking about AMC because we want this company to succeed against all odds. Like Adam Aron himself said, pretty much every other meme stock has gone out of business outside of AMC and GameStop, and AMC right now has much stronger fundamental value than GameStop. I do think GameStop has better squeeze potential, though that is a very personal opinion of mine which I have explained way too many times for me to repeat once again here, but from a fundamental standpoint, AMC is the one with an important role in the existence of a sector in the economy that is worth trillions of dollars, and their importance is definitely increasing, as both seen by the changes in the businesses as well as the earning reports. Adam Aron went around answering a ton of questions by investors, so I will cover the most important ones. Sean Goodman said that shareholders are very excited about the retail popcorn sales and their initiatives there, and said investors want to know if AMC plans on expanding on this further and if there are other potential revenue streams similar to retail popcorn that can help grow the business. Adam Aron said, and I quote, "I couldn't be more excited about the popcorn success. We spent over a year in our food and beverage department working on the right recipe for home corn. Whether it was in the bag ready to eat or microwave pouches that you microwave at home, we wanted it to taste just like it tastes in the movie theater. And by the way, there's a secret to our popcorn. Not all popcorn is created equal. There are different grades of corn. And we buy the best there is. So one of the reasons why our popcorn is so good at AMC theaters is that we buy the best corn. It's like grated. And so, our corn at home tastes great. And the sales, like, Walmart can barely keep it on the shelves. And they keep on reordering and they keep on selling out. So, yes, we gave Walmart a 6-month exclusive because they gave us so many store locations. We rolled out the AMC popcorn in like 2,600 Walmart stores. Very few brands get to roll out on day one in 2,600 Walmarts. Normally, you'd get a fraction of that. And you prove your way. But they believed in our brand. And it's been a big success. And we're happy to give them the full exclusive. But, yeah, as soon as the exclusive is up, we will have conversations with all the major grocery chains, with all the major retail outlets in the country. It's taken a while, but I'd like to see AMC popcorn on every shelf where you can buy Stack products. There are other things too. I've already talked about the candy products. That's next. And there are a whole host of other ideas that we have to grow revenues for the company. However, the most important shareholder question that we all need to talk about, especially as it will be in association to the next big part of this video, regards the high level of failures to deliver on AMC securities. Adam Aron had some really interesting things to say. He said, and I quote, "There's a limit to what I'm supposed to say on this subject. But I can say some things. I know it's maddening for so many of our shareholders. I read my Twitter feed, guys. I know what you think. I know what you say because I get thousands of messages a day. I know you're really frustrated by the high number of FTDs. And as many of you, not all, as many of you know, an FTD is a failure to deliver a share within the normal trading, closing cycle, which is within 2 business days of the trade. And so, if someone never delivers a share, they're breaking the law. But if they deliver the share 3 days late, instead of 1 day late, which is on the 3rd day, they show up as an FTD in your eyes, but the trade did consummate. A little slow, but it was consummated. If more than 0.5% of our trading volume is in an FTD status, then we would go on something called the threshold list. And we've been on and off the threshold list many times in 2023, and for that matter, in 2022 as well. And this drives some of you out of your minds because I read what you say. And I say out of your minds in a nice way. I don't mean in a nasty way. But you're angry about it because you think there's something wrong going on. And again, I've got to be very careful what I say legally, but I can tell you this. On multiple occasions, even multiple occasions this year, we have gone to the New York Stock Exchange at very high levels to make them aware of our status on the threshold list. And similarly, we have gone to FINRA, which is the regulatory body of the public markets. And we are voicing your concerns. Unfortunately, I know many of you would like to see the results of what they send us back. It's not so easy for us to share that information with you. But we're aware of the concerns. We're aware of them ourselves. And we are taking them to the appropriate regulatory bodies. So, I have quite a couple of things to say about this. First and foremost, I cannot prop Adam Aron enough for actually talking about the huge elephant in the room. In fact, I actually really appreciate and respect him for engaging the most in comparison to other CEOs. I also think he did well in reporting these incredibly weird occurrences to regulatory bodies and the New York Stock Exchange. Adam Aron said he cannot divulge too much into this, which honestly really sucks. I hate the secrecy by which all these public companies need to abide by. If there was nothing sketchy or wrong going on, why the need for secrecy at all? It's very ironic that public companies can be public about everything but the literal crime happening right before our very eyes. But regardless, I don't hold this against Adam Aron. He has to abide by the rules and the advice by the lawyers, and that's that. AMC's stock price is blatantly manipulated to the point where it's comic. The trading session that took place directly after the earnings report was honestly a sight to behold. Overall, this earnings report was an absolute home run. I am incredibly proud of AMC's strengthening balance sheets along with investors' resilience. And this is about where all the good vibes come to an end, because on Friday afternoon when the markets closed, a court decision by a Delaware judge finally ruled to approve the conversion plan. A lot of people have been wondering what this means for you as a shareholder or interested party, and I am going to break it all down. The way I want to format this for you is that I am going to give you the date in the event that is taking place, along with all the details, so that you guys know what the consequences of this conversion mean for you. Yesterday, on August 14th, AMC filed the amendment to enable the share increase, reverse stock split and conversion to occur. On August 24th, 9 days from today when I released this video, Class A common stock will commence trading on a 1-for-10 split adjusted basis. To make this easier to understand, this means that by comparison, whatever the prior trading day's closing price is will be multiplied by 10. August 24th will be the last day of trading of APE, and one APE unit will then become comparable to 1/10 of a share of Class A common stock. Once again, each APE unit will be convertible into the equivalent of 1/10 of a share of an AMC share. Make sure to remember that. On August 25th, APE will no longer be trading on the New York Stock Exchange. The conversion of APEs into Class A common stock will also take place on this day at 9:30 a.m. Eastern Time. On the post-market, the DTC effects on its books the conversion of APE held by beneficial holders. Then on August 28th, the company issues Class A common stock as litigation settlement payment to settlement payment recipients. Copying the information directly from the 8K filing, let's run through some examples in basic numbers to give you guys an idea of what is to come. If you own 100 AMC shares and 100 APE units on August 24th, your 100 AMC shares will become 10 AMC shares after giving effect to the reverse stock split, and your 100 APE units will be convertible into 10 AMC shares, which will happen after them giving effect to the reverse stock split instead of being convertible into AMC shares. August 24th will serve as the record date for the litigation settlement payment with respect to the AMC shares you hold as of that date. On August 25th, your 100 APE units convert into 10 AMC shares, at which point you will hold 20 AMC shares in total. An important thing to remember is that AMC will not be issuing fractional shares to record holders. The transfer agent is going to accumulate fractional entitlements, sell them and then distribute cash in lieu thereof, so for most of you, expect a little bit of cash to show up in your accounts. So that's the case for those of you who hold 100 shares of AMC and 100 units of APE. But what happens to those that sold all their APE units and only have 100 shares of AMC? Once again, on August 24th, your 100 AMC shares will become 10 AMC shares. And for those of you who sold all your AMC shares and have 100 units of APE, your 100 APE shares will be convertible into 10 AMC shares after giving effect to the reverse stock split. On August 24th, the AMC common stock will start trading on a split-adjusted basis, which means a new share of AMC common stock is equivalent to 10 shares of AMC common stock. For comparability, the closing stock price of AMC on August 23rd will be multiplied by 10 as we mentioned earlier. For those of you trading option contracts, listen very clearly. AMC expects that the deliveries under option contracts will be adjusted in the regular way to account for the reverse stock split, so expect prices to be adjusted to the new changes, so nothing to worry about on that end. For that one or two people that typically like to ask tax-related questions, AMC believes the litigation settlement payment is a tax-free stock distribution for U.S. federal income tax purposes. Stockholders should still consult with their own tax advisors though. All this information, the 8K filing that is, will be linked in the description of this video so that you can inspect for yourself all the things I have said. Now, on to the controversial point, which is going to be a mixture of the shareholder letter that was released by AMC and Adam Aron as well as to the many people that are spreading misinformation and baseless assumptions on what happens now. Adam Aron wants to dilute the stock and I have strong feelings that it will not be the last time he does it either. He cited the need for having cash on hand to sustain itself through winter as AMC typically see reduced moviegoers, but in their latest earnings they showed that they make and have enough cash to hold out. The need for dilution and the potential for future dilution is by far the biggest concern and biggest turn-off to me as a shareholder. I made a poll on my Twitter, and though only a few people answered it, it does show most people are okay with dilution. Most people that follow me on Twitter believe dilution is the way to go to help AMC survive. I personally don't think dilution is the answer that AMC should be seeking to get every time they need to raise cash. I think AMC is strong enough to bolster and sustain itself without having to continually dig deep into their shareholder pockets and undermine their ownership of the company. Let me go on record to say that though I understand Adam Aron's reasoning and train of thought, and that of the many viewers and followers I have that agree on diluting AMC, I strongly disagree with the path we are currently on. This is why this stock is such a blue baller to me personally. It has and continually shows so much strength as we have already seen, and its potential for greatness is literally untapped. I get the hardest turn on when I think about not what AMC is, but what it could be, but then comes Adam Aron in the board with some unforeseen move and kinda ruin the hype all around. And to those that questioned me in the past last year when I said APE units would not result in any squeeze, that they would not result in any changes by governing agencies with oversight in the markets, I ask you now to acknowledge that these changes that AMC does simply don't squeeze it. I bring this up again not to rub it in your face, but because once again I am seeing a very concerning number of individuals across social media once again talking about how we need to dilute to force shorters into buying and forming a squeeze. That's right. The new train of thought by some AMC fanatics stems from the belief that AMC should dilute endlessly to pay off its entire debt all at once as soon as possible. Once that happens, according to them, the so-called short thesis will be defeated and AMC runs to an all-time high, at least to a very high price. I guess somewhere in the realm of reality these people were abducted by the bullshittery taking place in the echo chambers of Reddit or Twitter, because this is about as absurd as it can get. First and foremost, let me present the most clear and obvious evidence that paying off debt does not equal shorters moving on, which is a really weird and baseless assumption. GameStop exists in the market right now, and though it has managed to hold a lot more of the value it gained on the run, it is still absolutely held down by shorters, and prone to manipulation just as much as AMC. GameStop has no debt and $1 billion sitting on hand, and yet I don't see the stock price flying to $1,000. If AMC pays off its debt, you cannot assume that a squeeze run will happen, especially after witnessing just how much manipulation exists and tools by which larger financial institutions use to abuse and manipulate the prices. I mean, for God's sake, look at the earnings report and the price action that took place. That was yet another pristine example of the large amount of BS these stocks are subjected to. I have seen companies with less bullish reports have tremendous runs, yet AMC barely ran $1 up before it started being dragged down. Saying that the short thesis ceases to exist the moment AMC pays off its debt is ridiculous and comes from quite frankly an ignorant standpoint, given that the short thesis for AMC was already defeated a while ago. A company can be in debt and not have a short thesis. Debt, as long as it's manageable, will not really affect a company, especially if it's growing. Look at Amazon and how it was running at losses for around a decade before turning profits, and then compare the stock price and watch it rise throughout the same period. So the idea that the short thesis ceases to exist when debt goes away is frankly a very uneducated one, and undermines the value that AMC has already shown to have. The next take is that AMC should just endlessly dilute until all the debt is paid, which is mostly grown as a way to back up what we just discussed about a phantom squeeze happening. First of all, this opinion is mostly ignorant of the fact that you can actually destroy a company by diluting too much. This is something that happens much more than people think. There are very serious risks with endless dilution, and given that around 50% of people already think Adam Aron is doing a bad job by diluting AMC shares, doing it more and more will definitely move that number up, which will increase the number of shareholders who sell their stock and move on, which further tanks the market capitalization of AMC, further making it harder for them to recover in the market, making it less likely for biggest institutional investors to jump in. The second point of this is that many people also assume that by diluting one more time AMC will be able to pay off its debt. Diluting is not that simply, and they cannot arrive at the conclusion that AMC will be able to pay off all their debt with one more dilution. In all frankness, it would take a couple of rounds of that to pay off all the debt at once, which is not a good idea. You guys could literally end up owning a single percentage digit of what you already do in AMC if this were to happen, so it honestly works against you. AMC is proving to be able to hold its own very well, and had they not throw away millions of dollars into some weird gold venture trying to play Columbus of the 21st century, we would be doing even better. Case in point, I wanted to quickly bring this up to you guys' attention. This weekend I went to see this new indie horror film at AMC made on a budget of $4.5 million by two YouTubers. With a budget of $4.5 million, literal chump change, the movie has now grossed over $36.5 million, and is looking to end its theatrical run somewhere between $40 and $50 million total at the box office, a tremendous success story. AMC, I don't know if you are listening to me, I highly doubt it, but if you are, please take heed of this advice by the armchair quarterback of YouTube and develop your own damn indie studio. By pumping little but fun movies like this throughout the year, you stand to make serious returns on your investment. You earn and keep all the proceeds for the ticket sales since it's your own company in production, then get to also rake in all the sales from the popcorn, the nachos and the soda pops. And then if that wasn't enough, whenever you find success and perhaps start a franchise, you could further compound this effect by selling fun merchandise like overpriced t-shirts and keychains at the theater again, an idea which Adam Aron quite literally talked about in the earnings report, crediting Twitter users before turning on them and calling them armchair quarterbacks. Seriously, this is the freaking opportunity of a lifetime for AMC to take advantage. When Disney is putting out so much failures and giant studios are thinking of ways to reduce their overinflated $250 million movie budgets, you can show the light by producing fun low-budget films, especially in the horror genre, which brings in the masses for some reason. Stop fiddling your thumbs and get it done as soon as possible. Now, back to where we were. The whole point of this part of the video is to simply say, stop assuming squeezes will happen if AMC does this or that. Nobody, not you or me or even Adam Aron I bet, can predict anything because we don't even know exactly what is happening behind the doors. We know the price of AMC is heavily manipulated, and we can theorize as to how this is done, but we lack the concrete numbers to really determine causality and effect on any significant change in business, so let us all humble ourselves and bring it down a notch with the constant pumping of a squeeze. Also, and I know I am going to get crucified for saying this, but Adam Aron shouldn't be performing risky business moves like diluting non-stop all in efforts to create superstitious squeezes. He needs to work on preserving the value of AMC among shareholders and potential shareholders by making moves that pay off big time in the long run, and short squeezes are very short. I would rather AMC grows to $100 in value over the course of 5 years than over the course of a week and then it goes away forever. I want more than just a payout. I want this company to grow and evolve to being much more than it already is, and I think Adam Aron does too, to be honest. I am no fan of his decision-making, you guys know that very well, and I really question the board's competence all the time, but I do give credit when it's due. Looking at the document Adam Aron produced, he goes over the new steps AMC will be taking. He starts with the goal of making AMC more resilient. He says were it not for their ability to raise equity over the past 3 years, they would not have survived. AMC survived solely because you and me and millions of other retail shareholders bought in and because fundamental value was too strong as audiences like a big screen. There was nothing AMC really did in particular that I can think of that really took them to the next step. I am trying to build awareness around the idea of them creating their own indie-like studio so that they can get started on the next big thing, but I highly doubt they even watch these videos. Regardless, AMC wants to raise more equity to remain strong, and it scares me deeply into thinking they will want to raise more equity later on again through further dilution. This is, like I said, my biggest fear. AMC is already resilient. It's the only meme stock business with a strong future as things stand, whereas everyone else is sort of trying to figure out how to make it. I get that flexibility for a business is very important, especially with the intentions of selling more merchandise and increase places to sell popcorn and perhaps other AMC products, but I am not a fan of the way it has been implemented, and the fear of further dilution down the road scares me into not buying more right now. Then, Adam Aron talks about eliminating capital raising inefficiencies of APE. They talk about unnecessarily higher dilution caused by the lower market price of APE units and how converting APE into AMC solves this so grievous problem. This one really triggered me because it was AMC who invented this problem. You cannot invest a problem, come up with a solution and then pat yourself on the back. It's incredibly weird and kind of insulting to anyone with a brain. Stop talking about the strength of just having one AMC share when it was you who wanted to split it into 2 categories in the first place. He then states that an improved balance sheet should result over time, detailing that the simplification of their equity capital structure will enhance their ability to buy back debt or exchange debt for equity, strengthening their balance sheets. This is a solid point and there's not much to go over it, so a double thumbs up on this one. He then goes on to regurgitate the second point by saying consolidating ownership of AMC into a single class makes it easier for investors to track their ownership of AMC and eliminates added complexity that brokers have imposed on holding or trading preferred equity securities. Once again, this is a problem that you yourself create as a way to force dilution when your shareholders previously told you no. You force this upon us and yourself and now are finger pointing at brokers. Get a mirror, stand in front of it and point straight at it. That's who's responsible for all this mess. We have known and have been very vocal about brokers' fraudulent collaborations with institutions, so don't come acting all moral when they didn't act right because you should have known from the get-go. Lastly, Adam Aaron says AMC will gain a better opportunity to transform AMC by investing in growth initiatives including more innovation at their theaters and optimizing their portfolio by acquiring high-performing theater assets. Again, this was a solid point. AMC Def should capitalize on all opportunities they can that will help them raise profits as soon as possible, so big thumbs up on this one. AMC raised $435 million from the dilution. I hope that in the end they put it to good use and not reinvest it in some dumb unknown company that nobody cares about like Highcroft. Invest in merchandise, in expanding your food ventures into other retailers and the availability of products for sure, and hey, perhaps if the board decides to once for all actually do something unique on their own to help raise money, maybe they should look at forming their own indie film studio and start making movies. You own the theaters, you can literally run free advertisements all by yourself if you want as well for goodness sake. And those are all the factual events that took place along with my thoughts. For some reason, I get a lot of flack because I come off as someone who supports and then hates AMC. It's really weird that people have become so tribal about the issues challenging AMC and the investor community as a whole. I myself don't take sides because it's detrimental to me as it is to AMC. I am of the cloth that believes every issue should be looked and assessed individually. There are things I will absolutely applaud AMC and Adam Aaron on, and there are some where I am going to speak serious smack on. Taking sides and ignoring all the questions and red marks just because you feel a need to belong is a serious evolutionary trait that in the end can only betray you and your interests over time, so I ignore it. Looking at some of the criticism I have taken in recent videos, I have seen others saying I am too aggressive. I can see where they come from, but I wouldn't call it aggressive, I would call it blunt. I am very blunt. I say things in a manner that are most genuine to me and am not weighted down by the fear of potential criticism. In fact, I literally welcome it. How many times have you guys seen me reach out and literally ask you to speak out when you disagree with me, to express your thoughts in the comments and let me know why you disagree? The little sub-community we have in this channel is one that is made up by people who I would say, on average, tend to be the most open-minded individuals of the entire AMC and GME movement. Literally, I cannot think of anyone else that has the diverse set of opinions and characters that we have, and I honestly think it enriches everyone in the end. Yeah, there's always gonna be a bit of anonymity, and confrontation can easily escalate when people get triggered in comment sections, but I quickly tell people to chill out and tone it down, focus on the objective facts and debate on those alone. I think people that participate and read through these things honestly get the most rewarding experience, so the general approach I have towards these things is the best I can think of. I can see how some think I am blunt, or aggressive as some have said, because I say the things some might not want to, or say them in a manner that others like to tiptoe, but it's always in good intention to produce the best results, and I love the fact we are not an echo chamber, so speaking on the results of this approach, I am very content with them. Looking through further feedback, I have been asked that I should be more active with the community. I think I really am very active, it's just that most of my time online is devoted to my own Discord, which everyone is welcome to join. It's free and linked below. You can DM me anytime you want and speak to me, or just comment here. I think I am pretty active on Twitter as well, but I don't get a lot of engagement there. I don't pay for Blue, so my tweets don't get pushed by the algo, and I tend to be more vocal about a larger array of subjects like politics, economy, entertainment and day-to-day drama, which I know a lot of people can get triggered and unfollow, but yeah, I am there quite a bit. I love Twitter because of how toxic and in your face it can be. In some comments on YouTube I have been asked if I am left-leaning or right-leaning. I guess some of these come from the criticisms I have made in my more economics-driven videos. I would say I definitely tend to lean left, but I am a unique case because I also have plenty of right-wing friends. It's kinda hard to find people you can converse about contemporary topics without walking away. People call each other snowflakes for being so sensitive to many things, but I personally acknowledge we live in weird times where we are seeing the middle and lower class abused by the systems that work to serve the upper class. I know politics is driven in large part to dive and conquer, so a lot of the issues we see don't have much weight overall to society but have huge disproportionate room in societal chatter, and I think this is all driven to take away attention from the fact that you are getting poorer, you won't have social security, your healthcare system is worsening, your kids' education is getting destroyed, and your ability to move into a higher bracket in life is becoming next to impossible. These things matter and everyone is very stressed, so little things and opinions all of a sudden have huge effects on the psyche, and I personally don't take it personally when people get triggered, because I understand the reasons why. However, with the folk I befriend, which for some reason tend to be much older than me. I love having conversations and differing in opinions. I do lean left but cringe at far left extremism and call it out all the time just as much as I do the right. Again, I try not to fall prey to the downfalls of tribalism and believe in judging things as they are individually. Let's see. Another type of request I get a lot comes from people asking me to collaborate with other big YouTubers. Personally, I honestly like being by myself. I have seldom watched other content creators in the AMC and GameStop realm of YouTube, and I don't like the way they cover things, or have found them disingenuous. I like doing my own thing and don't like to participate with others. I might collaborate with someone in the future, but for the moment, I'm just going to stick with my own content as I usually have. Lastly, I have gotten asked why I take so long between videos. The reason is because there's not a lot of AMC and GameStop content to make. Making videos is a very long process. It can literally take me like 5 to 10 hours to put a video together, most of the time going into research, of course. It's a very annoying process, but I love doing it for you guys. I have been thinking of making real voiced videos because they take a significantly less amount of time to make, but that wouldn't mean this robot vibe just goes away. I'm honestly debating just doing shorts with my own voice since I don't make shorts at all. I have used my own voice on my TikTok videos, so if you are one of those asking to hear me, just head over to my TikTok. The name is the same, Simulate and Trade. I have like 160 followers. Funny enough, in 2019 and 2020, I had an account with over 200,000 followers. I absolutely blew up on TikTok for a while and had big content creators who now boast over millions of followers following me back then, in my comment section and all. What happened was that TikTok shadow banned my account for some reason. I think I had posted a funny clip of a street fight and I guess the Chinese government took it personally or something. My videos went from getting literal 17 million views on average to like 100 if I was lucky overnight, and those were all followers. They were not getting exposure anymore and I was very saddened by TikTok's move. I still kind of am, to be honest, but such is life. Anyways, that's where I am going to end things. Thank you for watching this video through its end. Let me know what you think below. Come join my Discord and start trading with us. Hope to see you in the next one. To the moon.